Good morning, stock traders, and welcome back to Stock Traders Talk Radio. I'm your host, Stock Sumo. Thanks for joining us on another wonderful Wednesday. Today is September 5th, 2012. Wow, where did the summer go? The kiddies are going back to school, and boy, did June, July, and August fly by. Well, I'm excited to kick off another month here. Joining us on this morning's program is Haas. What's happening, bud?
Good morning, Mr. Stock Sumo. You're a poet and you didn't even know.
I love poetry and alliteration. A couple of my more favorite things there when it comes to word verbiage and grammar. Never was much of a reader myself, but poems and alliteration, I like that stuff.
That's awesome, man. Do you mind if I roll into the stock spotlight of the morning, get off of our grammar and alliteration, and talk about stocks?
Let's do it. What do we got for him today, Haas? Take it away.
We have a stock that we've talked about a few times on the radio show in the past here. We caught the first major run from 002 area, ran all the way to about 3 cents, if I remember correctly. Died off kind of slowly over the last couple of months. And now it seems to be heating up a little bit again today, or, well, just over the course of the last week or so here. So we figured we'd give it another spotlight. Ticker is ENTB. Company is Entest BioMedical. And I'm just going to start off today here, taking a brief little look at the website for the company and going over the overview here so we have a general idea of what this company is doing. Overview: Entest BioMedical Incorporated develops immunotherapeutic treatments that address illnesses and maladies in both veterinary and human medicine. All right, so we're on the veterinary side of things, animals, and also looking to move into the human side of things at some point in the future on these treatments that they're using on animals right now. Of specific interest to us are immunological vaccines for oncology and veterinary clinic, well, for oncology, immune-based cancer vaccines, as well as the acquisition of veterinary clinics. The basis for the majority of our approaches is underpinned by leveraging the body's own reparative immunological mechanisms as opposed to using toxic chemicals. All right, so basically what that means is their treatments are based on getting the dog or human's own immune systems to work against specific tumor cells and whatnot. For the cancer treatments. All right, so we have a two-pronged focus right here. We have the research and development of these immunological vaccines, but also veterinary clinic acquisitions, which is another side of things that in theory brings them near-term revenues and hopefully provides some nice cash flows to allow them to research and develop these cancer vaccines and take them through the stages that we all know are very difficult to get through with the FDA and whatnot, and getting a drug approved as they proceed through all the clinical trials. All right, so I mean, this is their website. You can go check it out. I'm not going to go through every single link on here by any means. You can do that yourself. There's lots of good information. I would go check most of this out. I'm just going to click on one here, which is the management team, just to get an idea of the background of the CEO himself, Mr. David R. Coos, if that's pronounced correctly, probably not. So let's just go over his bio real quick. David Coos is the founder, chairman, and CEO of Entest BioMedical Incorporated. Dr. Coos has over 26 years of investment banking and venture capital experience, with a primary focus on fully reporting medical and biotechnology ventures. He holds a PhD degree in sociology and a Doctor of Business Administration and Finance. Additionally, he has authored, co-authored several peer-reviewed journal articles, primarily on biotechnology-related subjects. All right, so it looks like we have a CEO, very focused in the finance field, and it sounds like he very likely has some investment banking and venture capital affiliates. And we'll talk a little bit about where Entest BioMedical has been getting its money over the last couple of years. And taking a look at the chart, you can probably guess where they've been getting their money and how they've been raising funds. But keep in mind, this is a very early stage biomedical company, regardless of whether they're testing on animals or humans. But anyways, so that's the little mini bio for the CEO there. You can go check out the bios of all these other, chief scientific officer and whatnot. I'm not going to go over those today. And frankly, I'm done with the website. So let's roll over to Pink Sheets and get into a few details that we can tease out just from the company info page on here. Over-the-counter QB company. Share structure right here, ENTB security details on the overthecountermarkets.com website. We have an outstanding share count of 219 million shares as of July 12th, 2012. And obviously this float and authorized share count way off. Authorized share count right now, I believe, is 1 billion shares. We'll get into that a little bit when we get into the actual latest 10Q filing. And this float is obviously much larger as well at this point. These are all the way back from 2011. But outstanding share count, relatively recent, as of just a couple months ago. Outstanding share count of about 220 million shares. So not too bad when you think about the prices that the stock is trading at and what they have going on. So let's roll over to the iHub real quick. And one thing that I really like to do with any company that I'm doing due diligence with is kind of just go over the press release history of the company, get an idea of any gaps in timeline. Sometimes you'll see a big gap from for a couple of years, and in this case we do. I'm going to roll this second page here, if it'll load for me. Okay, there we go. All right, so we can see here there was a press release on November 18th, 2009. And after that, there's basically like 1.5 years there where they don't really put out any press whatsoever. So very, very likely anything before that point, you can just set it and forget it. It's related to some patent filing for a COPD stem cell treatment, and it in fact is related to stem cells, which is kind of what this company is playing with. But if you read through the rest of the press releases, it really doesn't have a whole lot to do with what they're focusing on now. All right, so I'm just going to skip anything before that press release, and we'll just kind of go over the history of press here. On March 3rd, 2011, Entest BioMedical successfully completes its first Immunvax, this is their specific treatment, cancer vaccine implementation in canine oncology patient. All right, so early 2011, they're starting to test their Immunvax cancer treatment in canines. All right, so big first step for the company. That's in early 2011. And then we have some quarterly reports, raising some money, offering securities. And then on July 25th, 2011, Entest BioMedical Incorporated signs a letter of intent to acquire the assets of an Oregon-based veterinary clinic. All right, so we got to keep in mind here, we have a company who's doing research and development on what we now know is a Immunvax cancer vaccine in canines, and they're also acquiring veterinary clinics. All right, so these veterinary clinics can bring in some revenues for the company to push them through these clinical trials, as well as act as centers to immediately take on, successful, drugs and treatments for canines. All right, so it gives them an immediate market if any of these drugs ever get through the entire approval process. All right, so let's roll on a little further into the future here. July 26th, 2011, Entest BioMedical unit prepares to enter the $58 billion U.S. pet products market by establishing online veterinary products. All right. I'm not going to go into this press release either, but basically what this is saying is they are looking to generate even more revenues now with a little third stem from the company. So we have the research and development of the immunological drugs, cancer treatments. We also have the acquisition of the veterinary clinics, which is looking to bring in more near-term revenues. And now we also have the sale of online veterinary products, also looking to bring in some near-term revenues. So basically what they're doing is they're building a little cohesive unit where revenues and whatnot from this online sales and also the veterinary clinics can fund these clinical trials. So very good strategy. They are in the early stages, but they're progressing pretty smoothly here. Let's keep going on. July 28, 2011, Entest announces promising results from its Immunvax canine cancer vaccine safety study. All right, so the treatment's safe. They can keep going on with clinical trials. Moving on here on October 24th, 2011, Entest BioMedical signs an agreement with Renovocyte and Medistem for a pilot study using universal donor stem cells. Let's actually go check out this press release because this is another research focus of them in addition to their cancer vaccine. This one has to do with osteoarthritis, and it has to do with a little joint venture with a couple other companies. So let's go over this. Entest BioMedical announced today that together with Renovocyte LLC and Medistem Incorporated, it plans to initiate a 10-dog pilot study using canine endometrial regenerative cells, called CERCs, in the treatment of osteoarthritis at the McDonald Animal Hospital in Santa Barbara, California. The McDonald Animal Hospital is wholly owned by Entest BioMedical. All right, so this is one of the veterinary hospitals that they own. And they are looking to start an osteoarthritis treatment, partnering with this Renovocyte as well as this Medistem company. So now we have two main studies going on with Entest BioMedical. We have the Immunvax cancer immunotherapy treatment in canines. And now we have the joint venture partnership clinical study with Renovocyte and Medistem for the treatment of osteoarthritis. All right, so those are the two main clinical trials that we're seeing results from over the course of the last year or so now. All right, so that was back on October 24th, 2011. A couple report filings, a couple annual reports. And on November 8th, 2011, Entest BioMedical Incorporated enters into a purchase agreement with Oregon-based veterinary hospital. We saw that press release back on, I believe it was March of 2011, saying that they were thinking about it. And finally, they entered into a full purchase agreement here with this Tarrington Veterinary Services Incorporated. So we have the McDonald Veterinary Hospital, which was mentioned in that last press release related to the osteoarthritis clinical trial. And now we have this Tarrington Veterinary Services Incorporated. Operated under Emerald Valley Pet Medical Center. All right, so we have basically two animal hospitals at this point, veterinary hospitals under Entest BioMedical Incorporated. But as we will see when we're going through the latest 10Q, they're having some issues with this Tarrington Veterinary Services Incorporated. There's actually a lawsuit that has been filed, and Tarrington has gone bankrupt. All right, so this one is one that, in theory, as of November 8th, 2011, is within Entest BioMedical, but at this point, it's not going to be a factor. Going through another current report file, yada, yada. November 18th, 2011, Entest BioMedical and Renovocyte begin pilot study of universal donor stem cell treatment of canine osteoarthritis. All right, so they begin that pilot study. And I'm actually going to click on one of these and we'll take a look at the results, but I want to go check out the latest one, and we frankly just don't have time to go through all these press releases. December 7th, 2011, Entest BioMedical launches investor relations campaign. A couple of small offering of securities to raise some money for the company. We'll get more into that when we get into the latest quarterly report. Entest BioMedical Incorporated declares a dividend of preferred stock. That was really a non-issue. That was actually in February of 2012. March 21st, 2012, Entest BioMedical is excited with progress on a 10-dog pilot study of universal donor stem cell treatment for canine osteoarthritis. This is a press release that we'll go check out. It's mainly the latest one with results from their actual clinical trials. Entest McDonald Animal Hospital has treated 8 dogs in a 10-dog pilot study, all of which are showing positive results to the stem cell therapy. And the osteoarthritis impacts up to 30% of all dogs. So those are just little bullet points from this clinical trial. So without even going through this, we can see that they've treated 8 of 10 dogs. So probably in the very near future, we're going to get final results from this dog pilot study. So potential catalyst right there. All of these dogs are showing positive signs and positive results from this particular stem cell therapy for osteoarthritis treatment, which is obviously a very large issue in many, many dogs. Probably lots of times undiscovered or leads to a dog getting put down. But ENTB is trying to change things in that into the direction of being able to treat the osteoarthritis versus putting these dogs down and whatnot. So make sure you go check out that press release. That is related to the osteoarthritis clinical trials, and I would love to get some results related to the Iminvax clinical trials, but they haven't put any out recently. So then we basically just have a bunch of report filings, securities registration statements. This is throughout 2012 here, after March there. And then a couple of press releases that I want to go over that were more near term here. We will go over on August 27th, 2012, a prospectus filed pursuant to Rule 424B, 424B3. And this is related to an agreement that they have with Southridge for company funding. All right, and this is really important because Southridge, obviously a large, basically investment banker, I wouldn't call it as toxic as like an Asher or a Redwood. We've talked a lot about those on the show and what they can do to a stock when they're getting super, super cheap shares. But they are in that category. And so it's always something to keep in the back of your head on where this company is raising their funds. So let's just go over this briefly. This prospectus relates to the resale of up to 37.6 million shares of our common stock, par value 001 per share by Southridge Partners 2 LP, which are put shares that we will put to Southridge pursuant to the purchase agreement. Southridge may also be referred to in this document as a selling security holder. The purchase agreement with Southridge provides that Southridge is committed to purchase up to $10 million of our common stock. We may draw on the facility from time to time as and when we determine appropriate in accordance with the terms and conditions of the purchase agreement. The put shares included in this prospectus represent a portion of the shares issuable to Southridge under the purchase agreement. This portion was calculated at approximately 33% of the company's public float as of June 1st, 2012. So it looks like if this is 33% of the company's public float, probably sitting at a float of about 110, 120 million shares as of June 1st, 2012. That's just something to stick in the back of your head too. But basically what this is saying is that Southridge is required to purchase shares from time to time as the company deems it necessary when they need funds. But obviously they're getting a pretty kosher deal with this situation, because the details of this is, I'm not sure exactly how many days it is. I've still been researching that a little bit. But they can purchase these shares at 91% of the value, for 91% of the value of the 2 lowest trading days on the previous however many days. And I'm not sure exactly. Oh, well, it says 5 right here. So it's actually right here. So I'm stupid and I need to keep reading. Southridge will pay us 91% of the average of the 2 lowest closing prices of our common stock for the 5 trading days immediately following the clearing date associated with the applicable put notice. All right, so they're obviously getting these shares at a discount. 91% of the 2 lowest closing prices for the 5 trading days that fit in with this agreement. And this will be ongoing for about 24 months, it looks like, this $10 million these put shares. So from time to time, we'll probably see more prospectuses related to Entest BioMedical asking Southridge to purchase shares at a discount. And if you go and check out other stocks that Southridge has been involved with, sometimes you see some major runs in these stocks, and sometimes you don't see major runs in these stocks. Sometimes you see complete sell-offs. All right, so you got to just keep this in the back of your head. Again, I wouldn't put them as in the category of as toxic as Asher or Redwood, but they're getting some significantly discounted shares, and we all know that everyone likes money and everyone gets greedy. So, you know, raising money through like Southridge and whatnot is probably a large reason why we've seen some of the selling off in this stock over the last couple of years. I mean, this company needed money. This company had a 20 million outstanding share count not more than a year and a half ago. You're talking about a small biomedical company. So they definitely need to raise funds in one way or another. And sometimes the short-term option is the only option, and it's not necessarily a great option. But let's just roll over to the most recent press release, get off of that funding situation until we get into the 10Q. Just yesterday, put out a press release. We covered this in the show yesterday. Basically appointing a director of corporate affairs within the company here, just so they can focus more on acquiring some of these veterinary clinics. Let's just read the first portion of this. Entest BioMedical Inc., a company focused on veterinary biotechnology and veterinary hospital acquisitions operations, announced today that it has begun the process of interviewing qualified candidates to fill the company's newly created position of Director of Corporate Affairs. Company spokesperson, blah, blah, blah. Let's see what David Coos has to say. Our primary goal is to continue growing the number of veterinary hospitals we own, stated Dr. David Coos, Chairman and CEO. In pursuing this segment of our business model, we will be able to continue growing our asset base, increase our current revenue stream, and establish an initial distribution channel for our products and therapies. The first of these products being Entest Immunvax, immune therapeutic canine cancer vaccine currently under development. Obviously, they own the McDonald Animal Hospital in Santa Barbara, California already. This facility serves as both a revenue source for Entest as well as a research facility for the biomedical company. It looks like they're looking to acquire 10 additional veterinary clinics within the next 16 months. So that's pretty significant if they can pull that off. We'll see how they structure that. I'm sure we'll be seeing much more press related to that in the near future if they plan to do that. Dr. Coos continued, 1 in every 3 dogs will develop cancer. And we saw that about 1 in 3 dogs also have osteoarthritis, which is related to their other clinical trials. So they're in 2 high demand markets. If they can. Let's see here. All right, that's about all I want to go over from that press release. You can go read the whole thing, but some key points in there related to what this company is really harping on: acquiring lots of veterinary clinics to bring in near-term revenues. 10 in the next 16 months. They're already owner of one. And that other one I mentioned they had some issues with recently where it's probably not going to be a factor considering it went bankrupt and they're filing a lawsuit against ENTB. But that is all the press I want to go over. And the last thing I want to go over is the 10Q. And I strongly recommend anyone go and read, a 10Q with any company they're looking at. There's lots of good details in it you can tease out rather quickly, actually, compared to reading all the press releases and whatnot. First thing I want to see here, as of July 12th, 2012, there were 219 million shares of our common stock issued and outstanding. We saw that on overthecountermarkets.com. So 220 million OS. Scrolling down, we see that the asset base isn't superbly large by any means, and you wouldn't expect it to be with a small biomedical company trying to fund clinical trials. But we do have some assets here. Total current assets, about 103,000. Total long-term assets, you can have about 521,000. Obviously, a lot of that's going to be goodwill. Liabilities. Total liabilities are sitting at about 500,000, $500,000 as well. Current liabilities, 461,000. And as you can imagine, most of those related to notes payable, convertible notes, just loans to the company to fund the different types of things they're doing right now at this early stage. Scroll down, and this is one thing I wanted to point out just related to how they've been raising funds over the course of the last 1.5 years or so. Obviously, lots of convertible notes and whatnot, and now they have their little agreement with Selfridge, which is, it's diluting the market. We see all these penny stocks dilute. It's about how they do it. But as of August 31st, 2011, we're seeing a share count of about 20.8 million outstanding shares. And as of May 31st, 2012, about a year later, we're seeing 200 million shares in the outstanding. All right, so significant dilution over the course of the last year to 2 years. And that's why we've been seeing the share price decline rather rapidly, because they're getting pretty significantly discounted shares. All right, the stock used to be trading, I believe, at like $2 or something a few years ago. So now we know why it's been going down. It's because you got about 10 to 20 times more shares than you had when the company started trading. Seems logical, doesn't it? Anyways, one thing that I do like about this balance sheet is, as we've talked about a lot now, these veterinary clinics that they're operating, they are bringing in some revenues. For the 3 months ended May 31st, 2012, we got about 100,000 in revenues. So you take that on a forward-looking basis, and just looking back, looks like they're doing about 100,000 each quarter. So, they're doing dang near $500,000 in revenues right now, annually, with just their one veterinary clinic that they own. You see here revenues from veterinary services as well as online revenues. They have their online site, but that's a smaller portion of the actual revenues they're bringing in at this point. But if they do acquire, another 10 veterinary hospitals over the next couple of years, think of how that number could go pretty dramatically, as well as, proceeding through these pretty cool clinical trials in some pretty big markets in the canine world. And hopefully, if their treatments really work really well, can proceed to some human clinical trials. And we've seen how these bio stocks that have no revenues, a billion shares, they're proceeding through these clinical trials. They have drugs that kind of aren't safe, kind of don't work. And, these stocks go nuts. They run like, 1,000% if there's some sort of positive clinical trial results. So who knows what can happen related to the clinical trial side of things. But just on the veterinary side of things, their veterinary clinics, they're going to be bringing in some pretty decent revenues over the next several years. And a lot of that will hopefully fund these clinical trials. All right, I'm not going to go over any of this. I'm just going to keep scrolling down here. And there's one other thing that I just want to go over on this. We've covered most of everything else in the press releases related to what this company's got going on, as well as their major funding agreement with Southridge for up to $10 million US. So we don't have to go over that again in here. But a couple things that I do want to note, if I can find them in here, let me just scroll down and find these here. This company does have some ties with Biomatrix Scientific Corp. Ticker is BMSN. We actually talked about that a little bit when we did the spotlight on either of these companies a couple months ago when they were both running big. And David Arcus, I believe, is the CEO of BMSN as well. So anytime you have the same CEO and the companies are both focused in the biomedical sector, it's very likely going to have some ties. But BMSN was a majority shareholder in Entest BioMedical for a long time. I don't think that's the case now. If you go and check in the actual 10Qs of BMSN, I think the percentage is much lower than majority control, especially with the dilution we've seen here. But it's just something to keep in mind that those two companies kind of have ties together and whatnot. But it's not much more than that, other than some sort of funding that occurred at some point. But BMSN does owe ENTB about $57,000. So that's just another little note. Anyways, scrolling down here, yada yada, going concern. You're going to see that with any penny stock. I don't even want to go over it. Getting down to convertible notes is what I want to get down to here. There we go. There's the convertible notes. Note 9. All right. So I encourage you to go check out the 10Q and read all of these. I'm not going to because, again, it's going to take forever. Just key things to keep in mind on how these convertible notes have been structured in the past and how they're still pretty much currently being structured. Throughout 2011, raising a bunch of funds, 42,000, 37,000, 35,000, 32,000, 32,000, 37,000, and on and on. So they're raising money from time to time, convertible notes, and basically all of these, are related to very significant discounts from the 3 closing bid prices of the common stock during the 10 trading day period prior to the conversion. 45% discount. So they're getting these shares at half price, and we see some of those toxic people involved. We see an Asher here, an Asher here. That's just something that, immediately turns you off if you see that. The good thing in this case is that most of these that they got from Asher were converted already. They matured, they've been converted, and that's another reason why we saw this stock get hammered, is probably Asher hammering it down over the last year. All right, so time and time again we see that, and now they are involved with Southridge again. Southridge has done great things for some companies, and it's also done some poor things for some companies, and some of that is probably related to the quality of the company. Let's be honest, you fund some pile of crap company that has no operations, no revenues, it's very likely to go bankrupt or just go to complete crap within a year. Would you want to hold your shares? No. I would probably just take my 8 to 10% interest on the notes, but if you're forced to convert, you're going to convert and you're going to find a way to sell them as quickly as you can. But in this case, hopefully that's not the case, because we have a quality company bringing in significant revenues. They got some pretty cool clinical trials going on and the like. But convertible notes, they've still been raising funds throughout 2012 here. And hopefully the last portion of that for a little while will be this agreement with Southridge that we already went over. So I believe that's about everything I wanted to go over. All right, you guys can go read the rest of the 10Q if you want to. Those are a couple of main things I like to go over from any 10Q. So just some bullet points. We have a company that is focused on acquiring veterinary clinics to bring in near-term revenues. And if you go check out their management, they definitely have ties within the veterinary realm. So it shouldn't be a problem with them to find some quality veterinary clinics to bring on board and acquire. And this company is also focused on a couple of different clinical trials that they're rolling through right now. They have the Imunvax cancer vaccine, testing it in canines right now, which is obviously a big market, but they do mention here and there that if it's, if it works in canines and they bring in some sales through the canine market, they're going to expand it into human clinical trials if possible, or license the rights to, test that particular treatment in humans to another company, another source of potential revenues. So we have that clinical trial going on. We also have the Renovocyte kind of joint venture clinical trial going on for osteoarthritis in dogs. And we've been seeing a couple press releases from this company related to the positive results there. Osteoarthritis affecting 30% of dogs, another huge market. So two really promising clinical trials going on. And they have these veterinary hospitals to bring in revenues, but also to act as an immediate market for this testing, as well as when these particular treatments are approved, just an immediate market for sales. And also they have the online store, which was more recently launched. We saw on the 10Q that they are bringing in a smaller amount of revenues right now, but it did just launch recently. So they could bring in some significant revenues on that side of things as well. So I really like what this company is doing. They're not focusing solely on the clinical trials with a lot of these smaller biomed companies. We see them, just focus on the clinical trials. They don't have any source of revenues or anything, and they just keep raising funds in the most toxic ways possible, doing reverse splits, selling off, reverse split, dilution. And, that just kills a stock. A good product doesn't necessarily make a good stock. I feel what David Coos is trying to do here is build a good stock as well by bringing some revenues to fund the clinical trials versus just continuing the dilution that we've seen over the last year. They've had some near-term issues with funding, and sometimes the only way to raise those funds is to do some toxic things. But we've seen some major runs from companies when they stop the toxic funding. All the pieces of crap toxic funders are out of the stock, and we've seen some huge runs. Perfect example recently is a BBDA or something like that. And then the company's got significant revenues, maybe buyback in the future. Who knows what can happen? But I really like what this company's doing. Let's just check out DD Amanda to finish up and then roll over to Stock Sumo for a chart. I know I've babbled on for 40 minutes and you guys are probably sick of me. I've probably repeated myself 100 times, but you know what? You just have to deal with it because that's how I do. I encourage you to go do your own due diligence as well because there's a lot of good information out there. As we can see, the stock had its major run back in early June, it looks like. Started picking up from the same area that we've seen it picking up from recently, all the way down in this 002 area, picking up large dollar volumes, rolling all the way to touching a high of 2.7 cents on June 19th, excuse me. Very high dollar volume days there. Slowly kind of dies off, selling off a little bit. And, to be honest with you, we're probably seeing some of those convertible notes hitting here and selling off a little bit. And now recently, again, stopped at that 002 area. And within the last week, we see the dollar volumes creeping up. Last couple of days, very large dollar volumes, 100,000, 120,000, closing up significantly last Friday from 0031 to 0061. A little bit of consolidation yesterday. We also saw market maker VFin on the level 2 screen playing with it a little bit yesterday. He was soaking up some shares, so he's a market maker to keep an eye on. Closing at 0053 yesterday. All right, so let's roll over to Stock Sumo for a chart. What are we looking at, Sumo?
Way to go, Haas. Nice spotlight, buddy. All right. I'm going to pull up a 3-year chart on this thing and take it back 2011. That was when the stock was at its highest. February, March, traded as high as $4.25. Not sure if they had a reverse split or what was going on then, if that's what the stock price truly was. But you can see it had its steady decline. And notice it was very light volume that whole time. The volume really started to pick up once it came down and found support off of 0015. And once it found that support off of 0015, it broke above these moving averages, which is when it broke out. Once it broke that 20-day moving average, the stock broke out off that bottom of 0015 and hit a high of 027. So nice run there, over a 10 bagger in just a short period of time. Notice that's when the volume really picked up. After that big run, it couldn't get above the 100-day moving average. It popped above it for just a second, but had a tough time holding above that, and that's when she broke down, lost support here off the 20 and the 50-day moving average, and that's when it came back down and retested that support level. This time it held a higher low at 0017. Now we're starting to see it pick up back off that support. We broke back above the moving averages here. Key thing, it broke back above the 20 DMA, which was at 003, and the stock had a nice run off that bottom, and it's starting to see a little bit of resistance here. I'd like to see it hold support off of that 20-day moving average if we do see it pull back at all. So the chart's looking pretty good. I like how the accumulation and distribution broke through that 50 MA recently. Same with the RSI. And it looks like the PPO is trying to get above the 50 MA overlay right here. You also got the slow stow that passed through the 50 MA overlay, and that's heading north. I'd like to see that slow stow get up in the power zone. I'd like to see the RSI continue north and also get up in the power zone. Remember, anything between 70 and 90 is the power zone. Currently, you got the slow stow about 68, and the RSI about 58. So good looking chart there. Key thing is support and resistance. I want to see it if it can't hold above the 50-day moving average and the 100-day moving average, which are sitting at 0058 and 0056. I'd like to see it hold 003, which is the 20-day moving average.
All right, man. Thank you for that excellent chart assessment. Mr. Sumo.
Good stuff. Well, right. Way to go. Another hot spotlight, Hoss. Good job. And want to thank all our listeners for tuning in.
All right. Cheers, folks.
We're out.
Thank you for listening to Stock Traders Talk Radio. All views and topics talked about on Stock Traders Talk Radio is solely for entertainment purposes. We are not professional financial advisors and always recommend you seek the advice of a professional financial advisor. Never invest in any stock featured on our show unless you can afford to lose your entire investment. The information contained on our show is based on sources which we believe to be reliable, but is not guaranteed by us as being accurate, and might not be a complete statement or summary of the available data. Stock Traders Talk Radio advises that the investments in companies profiled are commonly considered to be high risk, and use of the information provided is at the investor's sole risk. Thank you for listening to Stock Traders Talk Radio.